Let me bring up from Enda Curran in Hong Kong a chart which is great because it's hard to read. I really mean that. It's hard to read this chart. Bring it up right now. On radio, it is the massive disproportion of U.S. imports of China stuff versus what they take from us. Here we are with the tariffs here, the tariffs there, and China is just tiny, tiny, tiny. Professor Roubini, this is the arch imbalance of President Trump's certitude. I heard this from Lawrence Kudlow yesterday at the Economic Club of New York. They speak of us as equals in trade dynamics. We're not, are we?
We're not equal in terms of trade dynamics, but China has many other ways to retaliate. Of course, they've only 130 billion of imports from the U.S., while the U.S. imports from China more than 500 billion. But let's not forget that the U.S. firms, whether it's Apple, GM, hundreds of others, have done hundreds of billions of dollars of foreign direct investment in China. In the past, when China had friction with Japan or Korea, they took action against these foreign investments, and therefore they can retaliate, and they're going to start doing it in many different ways. China can also retaliate by letting its currency weaken. The RMB has already fallen 8%, and then there's the nuclear option of dumping U.S. Treasury. I don't think that's likely. So the idea that there is an imbalance and China cannot retaliate, I think it's actually a wrong argument.
Your heritage of being born in Istanbul, of study in Milan, study with Jeff Sachs at Harvard, your international sense, your old world sense is a study of how China will react. Jonathan Spence 101 at Yale University, how would you presume that China will react to this approach by Mr. Trump?
First of all, the Chinese can be flexible. They need to do reforms, and some of the reforms will have upper hand. But China and President Xi Jinping cannot lose face. And what happens is that the United States is starting not just a trade war with China, but geopolitically wants to contain China. China has never given up on its own Made in China 2025 program, for example. And therefore, the risk is that if you try to contain China, China is going to become actually more aggressive and less cooperative. And I think that's what's going to likely happen. They're going to retaliate in many and different ways. So this is going to be counterproductive.
Hi, Nouriel from Milan. Do we underestimate the dangers of a Chinese GDP that is slowing down, or even the size of shadow banking in China?
Well, there has been a slowdown in China, but every time there is excessive slowdown, after a tightening of monetary, fiscal, and credit policy, there is an easing of monetary, credit, fiscal policy. China has not run out of tools. Yeah, there has been a significant correction of the stock market, 25%, but the wealth effect is small. Yes, default rates have gone up because they are reducing leverage and allowing more flexibility. But, you know, that's manageable. And the currency weakening actually is occurring right now when they have capital control. So it's not like a free fall like in 2015 and 16. And that actually helps China. You know, the currency goes down by 8%, the U.S. imposes tariffs of 10%, is a bit of a wash in terms of the competitiveness. So China has the macroeconomic policy tools to manage its own slowdown. Of course, China so far has kicked the can down the road and not dealing with too much and too fast enough with the issues of overcapacity, over leverage, and debt. But China is going to do it gradually, and China is going to take the long-term view. China is going to be in a long-term competition with the United States. Once Mao was allegedly asked what he thought of the French Revolution, he said, too early to tell. And China takes an approach that is decades long. We have midterm election, we have election every 2 years. China has no elections, so they can take control of their own policies and face and threaten the U.S. over the medium-long term. So they may win this war.